Good afternoon. This is Kevin Cameron. I'm coming to you on Friday, July 17th. This is a pre-recorded webinar, so there won't be any Q&A on it. If you have any questions, you can always email me after the webinar. I would be happy to respond to any questions you have. I am getting a lot of emails with questions, so if you do send me an email, maybe be patient. It might take a day or two before you get a response back. Today, we're going to talk about the forgiveness application process and how it relates to the documents that we're going to provide to our lenders. I think this is a very important process. I think we focused a lot on the forgiveness process as far as what expenses to include, how to put them into the spreadsheet, how to calculate our FTEs and our qualified payroll costs and our qualified non-payroll costs. Now it's time to dig a little bit deeper and actually start talking about the documents. So first of all, most of you have been using our PPP Excel workbook. If you haven't, you can get it. You can obtain it at www.pppexcel.com. Be happy to answer any questions relating to that. We update it as often as we need to. There hasn't been an update since June 22nd because there hasn't been any new guidance from the SBA since then. But we do update it when we need to, and we will respond to any questions relating to it. So first of all, I want to make sure that you understand that this entire webinar is based on the June 16th, 2020 forgiveness application that the SBA had issued, and the guidance that's under that, including the guidance that was issued on June 22nd. We did have some minor guidance issued on June 25th. It related strictly to fishermen, so it was a very specific guidance that doesn't apply to most of us. So really, the first thing you have to figure out with respect to what documents you're going to provide relates to what form am I going to file. There are two forms, you should know that by now. There is the EZ form, which is just as it says, it's an easier version. It requires less information. It requires less documentation to be submitted to the lender, but there's still a lot of documentation that you're going to have to maintain, and I'll get into that a little bit later, because much of what you're gathering will not go to the lender. You'll just keep it for a very long period. The SBA is telling us that you must maintain all of your documentation for 6 years after your loan is forgiven or paid in full, whichever is later. So if your loan, say, is forgiven on October 31st, 2020, you're going to have to keep all your documentation from 6 years beyond that date. So that's a very long time. Most of us aren't used to keeping our documentation that long. If you do file the 3508EZ, you're going to refer to page 4 of the instructions, and that's going to tell you what the documentation requirements are. If you complete the long form, which is the 3508, you're going to refer to page 6 of the instructions for that form to see what the documentation is. They're very similar with respect to the costs, but they're different with respect to the employee and the payroll documentation for employee hours and so forth. So first, let's talk about what are the 3 qualifications for filing the Form 3508EZ. The first one is that you are self-employed, independent contractor, or sole proprietor. And generally, I'm going to pretty much always refer to that as a self-employed person going forward. If that person had no employees at the time that they made the PPP loan application, and they didn't include any employee salaries in the computation of their average monthly payroll for their borrower application, they can file the Form 3508EZ. So that pretty much tells us that all our self-employed people who have no employees can file the 3508EZ. We also know that there's 2 other classes of borrowers that can use the 3508EZ. The other 2 classes are borrowers that never reduced an effective pay rate of their employees by greater than 25%. So if you were reducing your employees' effective pay rate by more than 25%, you automatically don't qualify for the 3508EZ, because that's a requirement for both of these 2 other qualifications. And then in this first qualification here, you'll see that it says and you did not also reduce the number of employees or average paid hours of your employees between January 1st, 2020 and the end of your covered period. It's a little confusing because they don't really say exactly what your starting date and what your ending date. Our interpretation of that is that if your average number of employees was, say, 20 on January 1st, and you were at 20 on the end of your covered period, then you would likely meet the criteria for this qualification. It does have an exclusion in here, which is interesting. It says you can include the employees that you reduced that you were unable, or you had an inability to rehire, or you were unable to fill the unfilled positions with similarly qualified employees. So there's some exclusions here. So for example, say I had 20 employees on January 1st, and at the end of my covered period, I had 18. But the reason why I lost those 2 employees was because I couldn't hire 2 people. I couldn't find qualified people, or I had some other inability to hire those people. As long as those two people were employees on February 15th, and I wasn't able to replace them by the end of the covered period, I might still qualify for this qualification for the 3508EZ. So it's not a pure head count. You can't just say, I had 20 employees and I had 20 employees. You have to look at the reason why you might have had fewer employees. Let's say that you had 20 employees on January 1st and 22 employees at the end of your covered period, then you're fine. You don't have to worry about it as far as that's concerned. So you only really have to worry about it if your employee head count is lower. The third qualification is the same one I mentioned. You didn't reduce anybody's pay rate by greater than 25%, and you were unable to operate during your covered period at the same level of activity you were on February 15th, 2020, or before February 15th, 2020, because you were complying with guidance from an order that was issued by either a local, state, or even federal authority under the guidance of information from the CDC, HHS, or OSHA. So let's look at a couple quick examples there. Let's use a dental office. If the dental office was ordered to be closed, say on March 25th, and was not allowed to reopen until May 4th, they likely qualify for this because their business was essentially ordered to shut down except for maybe emergency services or something like that. So they were not able to operate during their covered period at the same level of business activity they were before February 15th, 2020. I believe that this qualification can really be met by a lot of businesses. You're going to want to look at your state, local, regional, county orders and see if any of those apply to you. And you want to get copies of those and make sure you use them for that qualification. So that covers the 3508EZ and how you can qualify to file for the loan forgiveness using that form. Now we're going to get into the nuts and bolts of what we really need to provide. And this is where it gets a little bit detailed. You can see the slide gets a little bit tighter with all the information. You can download these slides and use them as guidance. Most of this is directly from the instructions. Some of it is from earlier interim final rules that we were getting that kind of gave us some hints as to what kind of data we were going to need to provide. So for example, with payroll costs, you're going to need to provide actual copies of your bank statements or a third-party payroll service report that documents the amount of your payroll that was paid. So if you're using like an ADP or Paychex or Paycom, check with the payroll service and see if they are providing a report that is unique to your covered period. And if they are, you can ask them to run your report for that covered period, and you'll be able to use that report in submitting documentation to the lender. If you're using your own payroll system internally, likely can run a report. If you're using like QuickBooks, you might be able to run a payroll summary or an earnings report that is for a specific period. And in a lot of cases, if you put in the hours of those employees in those reports, you'll actually have the hours data available too. But you'll see in a little bit that, interestingly, hours information is not going to be required to be provided to the lender in most cases. So you're going to retain most of that data in your own records. I will reference the fact that the spreadsheet that we have, the PPP Excel expense tracker and forgiveness calculator, has some great worksheets for calculating all of those hours reports and so forth. So I would definitely use those worksheets, and I'll reference that again in a little bit. They do say that you need to provide the payroll reports. So like your Form 941, your state unemployment tax return for the period or the quarter that your covered period fell in, which could be 2 quarters, it could even be 3 quarters, depending on how many weeks are in your covered period. You're going to want to provide those for any periods that overlap. So if your covered period overlaps 2 quarters, you're going to include both quarters in the payroll reports. The interesting thing about that is the payroll Form 941 won't necessarily provide the sufficient payroll data, but apparently the SBA thinks that if you provide that, at least you're proving that you have payroll. So that's why you provide the payroll tax returns. The receipts or canceled checks or account statements documenting the amount of employee health insurance and retirement plan contributions made during the covered period are required. Notice I highlight or, because it seems based on the information that you don't have to provide all of this. One of these 3 items would suffice, which is very interesting because it doesn't ask you for proof of the retirement plan contribution calculation. And we know that under the guidance that was issued on June 22nd, there's some indication that retirement plan contributions for owner employees might be limited to 2.5/12 of their 2019 retirement plan contribution. But nowhere in the instructions does it tell us to provide a formula for that. So I would probably suggest that you do that calculation if that requirement or that limitation or that cap, if you will, holds true in the final guidance we get, if we ever do get final guidance. Then we would probably need to provide some sort of computation. So for example, let's say that I contributed $50,000 to my retirement plan for 2019 for an owner employee. If I follow the 2.5/12 cap, the cap on the contribution for that employee is roughly $10,400. Let's say we paid $20,000 for that person during our covered period. Based on this June 22nd guidance I referred to, we would only be able to count the $10,400 in our covered payroll costs for the loan forgiveness. So obviously we would need to provide the lender with some type of calculation to show where we came up with that number. So until we know better, keep that in mind. I've been asked by a lot of people, should I provide copies of my invoices from my health insurance carrier? Even though the instructions do not specifically indicate you should, I believe it does make sense to. It'd be one less item for the lender to question. So I would recommend that you do make copies of your group health insurance statements or invoices you get on a monthly basis. Do you need to provide a retirement plan contribution calculation? Apparently you do not, as I mentioned a moment ago, but if you've got it, it might not hurt to include it. So if you're plan administrator or if you calculate your own retirement plan contributions, doing that interim calculation to support the amount that you paid during the covered period is probably not a bad idea. For Form 3508EZ, that's the EZ form, if you check the box that you did not reduce the number of employees or average paid hours during the period January 1st to the end of your covered period, you have to provide documentation for this. Now, what's interesting is that the SBA doesn't tell us anywhere what that documentation is. So what I'm suggesting you do is that you provide an employee listing, maybe an earnings report for January 1st, 2020, and an earnings report for the end of your covered period, and supply both of those to show how many employees were on payroll for those 2 periods. If you have, like I used in my example earlier, if you have 20 employees on January 1st and only 18 employees at the end of your covered period, and you have a reason why those 2 employees are no longer employed with you, you're probably gonna have to provide information for that as well. So it's gonna be interesting to see if we get further guidance on that. The documentation that you are required to provide or maintain for the long form, which is the 3508 long form, if that's where you get into the issues relating to your FTEs, your full-time employees. Remember, if you're filing the 3508EZ, you don't really provide any employee FTE calculations because you're telling the SBA that you meet one of the exceptions. So you're going to need to make sure that you have documentation to prove the average FTE for your employees for one of the 3 reference periods that you select. You do not have to provide the documentation for all 3 periods. You don't even have to calculate the FTEs for all 3 periods. If you know that your FTEs were lower in the period January 1st, 2020 to February 29th, 2020, then just completely ignore the 2019 period because there's no need to calculate it. The SBA allows you to choose which period you want to use for your reference period. Again, the SBA doesn't give us a lot of guidance here with respect to what documentation we're supposed to provide. I've listed here some suggestions: the payroll tax returns or and the state quarterly payroll returns. Even though they don't reflect hours, they reflect employees. And if you notice, I mentioned earlier that they do want the payroll tax returns for the covered period. So I'd imagine that they would want them for your reference period as well. You'd also want to provide or maintain payroll records reflecting the number of hours worked. That could be employee time reports, time clock reports, any type of information regarding that. If you're using the election to count all full-time employees as a 1.0 and all part-time employees as a 0.5 FTE, then you'd probably want to maintain some documentation that reflects that those full-time employees are really full-time and those part-time employees are really part-time employees. So the interesting thing is one of the things I've been pointing out to people is that if you fill out the FTE calculation worksheets in the PPP Excel spreadsheet, I believe you can use that as your documentation. It's actually very thorough. It lists all the employees, it lists their hours worked, and I think that that would probably help you very much to maintain that. So if you're doing a long form, you definitely want to fill out the worksheets relating to the FTE calculations. One question I've been asked from a lot of people is, because of the extended covered period, I'm going to be able to use up all of my loan money just on payroll. So should I just stop worrying about my retirement plan, excuse me, not retirement plan, my rent, my mortgage interest payments, or my utilities? And the answer is you probably can. The only reason why you might want to still provide that information is just in case the lender were to deny maybe your retirement plan amount for the payroll cost or something along those lines, then you would have the non-payroll cost information already provided. So you really have to make your own decision as far as that's concerned. But I'm seeing a lot of examples now where the payroll cost alone is enough to provide for 100% loan forgiveness. So we might not see a lot of people supplying non-payroll cost data. But having said that, I'm going to go through what the non-payroll cost data documentation requirements are. And they're pretty straightforward here. I don't think that there's anything unusual or onerous about what they're asking for. If it's a big business mortgage interest payment that you're including in the non-payroll cost, they want a copy of the lender's amortization schedule and receipts or canceled checks for the payments, or they want the lender account statements. And notice that they want the account statement for the month of February, as well as all the months of your covered period and 1 month after your covered period. Now, the reason why they want the report for February is because they want to see that the loan existed prior to February 15th, 2020, because that's one of the requirements. So I've been asked from a lot of people, can I get a statement from my lender? Can I get like an annual statement that may cover all these periods, or a letter? I think all of those would suffice. A lot of us got our loans from the lender that has the mortgage with us. So obviously they have access to that data, but I would still compile it. I wouldn't expect the lender to go pull that from their records. It's interesting because the instructions to the forgiveness form doesn't tell us that we need to provide a copy of the original note. So I thought that was kind of interesting. But you can see from here, it's pretty straightforward as to what they need. And again, I highlighted the or because it's not and. You can provide the statements and copies of the receipts and checks or the amortization schedule. So that's pretty straightforward. Rents are similar, except the instructions do tell us that we need to provide a copy of the original lease agreement and receipts or canceled checks for the payments that were made, or we need to provide lesser account statements for the periods, again, February 2020 and all periods of our covered period, as well as 1 month after our covered period. Now here it's a little bit more interesting because I would believe that providing a copy of the original lease agreement would make sense. So keep that in mind. I gave you an example here. If your covered period was May 4th to June 28th, which is a traditional 8-week covered period, you're going to want to provide the February, the May, the June, and the July statements for the rent. If you don't get a lesser account statement and all you have is a canceled check and you can't find a copy of the lease, you better get a copy of the lease because I think you're going to need that. If you don't have a lease, maybe you're leasing from a related party or a friendly party, and it's more of a gentleman's agreement, or it could be arm's length, but it isn't necessarily written. I do recommend that you get a written lease. Just go ahead and get that taken care of. Just make sure that the lease identifies what the original lease period was. Even if it's dated today, make sure it acknowledges that the lease was effective prior to February 15th, 2020. And then I think you'd be fine using a copy of that lease for the proof for the non-payroll costs for rents. We still believe that related party leases are includable as non-payroll costs. There's been a lot of chatter and discussion as to whether or not self-rentals are included. Until we hear otherwise from the SBA, we are still advising people to include rental payments made to related parties as long as they're made arm's length. The rental payments need to be reasonable. They can't be too high or too low, particularly too high, of course. For utility payments, first thing I want to point out here is actually number 2 on the slide, and that is that we're still kind of in a gray area with respect to utility payments, because for whatever reason, the original guidance told us that transportation was included in our utility costs, but we've never gotten any guidance from the SBA on what that meant. They did tell self-employed people back on April 20th that gasoline for your company vehicle can be included as a utility cost. So for 3 months now, we've been telling people you can include the fuel cost for company vehicles under the utility payments category. But because they haven't given us any other guidance with respect to other transportation costs, we've been telling people to be a little more conservative there and don't include things like repairs and maintenance or tires or any other vehicle type expenses. If the SBA tells us later on we can include those, then maybe we'll include them. Odds are we won't need to because of the extended covered periods we can take now for up to 24 weeks. We all know about that, of course. So with respect to documentation, you're going to have to provide a copy of an invoice for the utility for the month of February, or really any month prior to February, so you can prove that the utility was in place by February 15th, 2020. And then you're going to want to provide the utility bills for all the months of the covered period. Now, what it doesn't mention in the instructions there, it doesn't mention the month after the covered period, but if you should happen to include a utility payment that was made by the next billing cycle after the covered period, you might need to provide that statement so you can see the payment that was being made. So for example, if my covered period ended on, say, July 8th, and my utility bill was paid on July 10th, but it was for a period, it was for an expense incurred prior to July 8th, then that statement after July 8th will actually show the payment. So maybe you want to include the statement for the month after the covered period as well, if you have any types of those expenses. So kind of keep that in mind. I'm going to talk now for a few minutes about the documents that you are required to maintain, but you are not required to submit to the lender. And folks, this is really the big area to really focus on here, because the entire Schedule A, the PPP Schedule A, which is in the Excel worksheet that we do, that we've got, it's also in the actual instructions to the form, the forgiveness form. That does not go to the lender. You don't provide that to the lender. What I find really interesting about that is that's where you list all of your payroll by employee, as well as FTEs and their hours if you have to calculate the FTEs. So the fact that you're not turning that into the lender is remarkable to me, because that's really where a lot of the work is involved in gathering and compiling the data. So it's almost like the SBA is going on a trust basis and saying, we trust that you're doing that calculation correctly. We just want the total data, like the payroll reports. So you do not need to provide the PPP Schedule A worksheet. I highly recommend you use the PPP Schedule A worksheet from the Excel workbook. It's for starters, if you do it manually, it's very time consuming. So either build your own spreadsheet or use the spreadsheet we've got to track that data, because it'll make your life a lot easier. It'll be summarized and very much easier to follow. If you remember, the PPP Schedule A worksheet technically has two tables. Table 1 is for employees that are subject to the pay rate reduction penalty. Those are the employees that were making under $100,000 per year salary or total pay for 2019, or essentially rank and file employees, if you will. So those employees go on Table 1 because that's where you have to calculate whether or not you have a pay rate reduction. Table 2 is for employees that were not employed in 2019 or were on a salary schedule of greater than $100,000 at any point during 2019. In both of those cases, all of that documentation has to be retained by you, which is going to be like your payroll summaries, your individual pay reports, your payroll reports that you put in maybe in your HR documentation. All that would be maintained there. You're going to have to maintain all the documentation for your FTE reduction exceptions. None of that goes to the lender. So if you've made job offers and people have refused the job offers, you got to get that in writing. That stays in your files. If you've terminated an employee for cause, that termination documentation stays in your files. It doesn't go to the lender. So there's a lot, like I said a moment ago, there's a high level of trust for making sure that you have all of this information in your records. If you're using the FTE reduction safe harbor number 1, that's where you're telling the SBA and the lender that your business was shut down due to a order that was based on guidance from CDC, HHS, or OSHA. Get a copy of the order. You might have more than one order. I spoke to people who are in California who have been closed down again recently, so they have multiple orders that they can reference. They also say that you need to maintain financial records that are relevant to reflecting the decrease in business. They don't tell us what relevant debt records those are. I believe those would be things like profit and loss statements and sales receipts, maybe sales tax returns, showing that your business has declined during the covered period. And that's really any period after March 1st to December 31st, 2020, as compared to February 15th, 2020. So if you have a decline there due to an order, you're going to meet that safe harbor. The other safe harbor is the rehire exception. It's the original safe harbor that was in the CARES Act. That's the safe harbor that says I had so many employees on February 15th or before February 15th, And then from February 15th to April 26th, my employees declined. I reduced my number of employees. And then by the date I turned in my application for forgiveness, or December 31st, 2020, whichever is earlier, I restored my employees back to the count I had on February 15th. If you meet that safe harbor, you need to maintain the documentation for it. Again, you maintain the documentation. You're not giving it to the lender, which again is very interesting. They don't give us a whole lot of guidance on what that documentation should be. I made some suggestions here on the slide. It would be things like payroll reports, payroll timesheets, time clock reports. Again, I mentioned earlier, if you elected the 1.0 full-time employee FTE and the 0.5 for part-time, documentation for those employees that are full-time or part-time. I mentioned earlier that we need to keep all of this documentation, both the documentation we give the lender and the documentation that we must retain in our files. We have to keep that for 6 years. I can't stress enough how important that is, that we maintain that documentation in good form for that period of time, just in case the SBA comes back and audits our loans. We know the SBA has told us they don't plan on auditing any loans under $2 million, but that doesn't mean they can't come back and audit those. So I went over time a little bit today. I tried to keep it to 30 minutes. I do appreciate everybody who's using the workbook. If you're not using the workbook, I recommend you give it a try. It seems to be helping a lot of people. Keep your questions coming. We appreciate it. And thank you very much.